This is really interesting, digging into some of the economic numbers. Let's go ahead and put this first piece up on the screen. This is what really sort of sparked this conversation for us anyway. Every single major currency, this is from Joe Weisenthal, is lower against the dollar today, except the ones that haven't started trading yet. So I don't want to get too much in the weeds here so that eyes glaze over. But effectively what is going on is because our Federal Reserve is hiking interest rates, that is causing massive ripple effects throughout the world economy. And in particular, this is a problem for countries that have a lot of dollar-denominated debt or that rely on a lot of imports from around the world because the dollar continues to be the global reserve currency. It continues to, like, 40% of the world's transactions are done in dollars. So when the Federal Reserve increases their rate, it usually increases interest rates throughout our economy. That tends to make the dollar stronger. That attracts investment capital from investors abroad seeking higher returns on bonds and interest rate. Not necessarily a bad thing for us. But for the rest of the world, now it costs them more to do basically anything. And again, this is especially a problem for places that have a lot of dollar-denominated debt or that have to import things like food, like basic or fuel, basic items. Now everything is more expensive. And this becomes an issue for us as well because obviously the economy is incredibly globally integrated. So it's not like we're this little island and we can protect ourselves from what's going on around the world. So that's why this is something to really pay attention to. I was reading an article and there was an economist here who put it this way. Central banks, of course, have purely domestic mandates. However, because economies are more interdependent than they have ever been, and so closer cooperation is needed, I don't think central banks can have the luxury of not thinking about what is happening abroad. This has been particularly a dramatic story in the UK. Let's go ahead and put this piece up on the screen. You've got the Bank of England saying they won't hesitate to hike rates because they are very nearly in crisis after the pound fell to a historic low against the dollar. Now, they have something that is a little bit different going on there because not only do they have the impact of our Federal Reserve Bank hiking rates, but their issue seems to be more directly related to the domestic political situation there, which is that the new prime minister announced this massive package of tax cuts, largely for the rich and for corporations, including such populist moves as lifting the cap on banker bonuses.
Sounds like what the UK needs.
It really is a total throwback kind of policy. I mean, it's quite astonishing when you read the details here. But I think Liz Truss kind of expected the market to be like, yay, tax cuts. And there was instead essentially a meltdown because they worried so much about the financial position of the country with, you know, taking so much revenue out of the budget with these huge tax cuts. So that's a big part of the story of why they're having such an issue right now.
Yeah, and actually it's going to have major problems for them on inflation because part of the thing is that a strong pound made it so that imports were less expensive. Whenever the pound is cheaper in regard to the dollar, then the imports become more expensive, which means that British companies are going to have to raise prices to compensate for higher costs, which puts pressure on inflation, which is already at the 40-year high in Britain. So they have some serious economic troubles. It's related, like you said, to the fiscal policy, but the fact is that all currencies globally are having problems with regards to the dollar, and the strong dollar as it is, it's not necessarily, this is why it's complicated. From our perspective, not a bad thing, because it makes imports a lot cheaper.
It helps us with inflation, and it's no accident that even as inflation continues to bite here, we actually have low inflation compared to a lot of other nations, because a strong dollar means when we are importing goods,
cheaper for us.
They're cheaper for us, and that helps keep our own inflation in check. The risk is that you have blowback from, you know, it relates very much to the monologue you gave yesterday, Saagar, about how when you have countries where their population is stressed out because of food prices or fuel prices or housing prices or whatever it is, you are more likely to have a lot of instability, a lot of chaos. And, you know, these things don't just stay in one place. If you have, you know, if you have a country collapse and you have massive migrant flows, guess what? That can really have a big impact on your politics and your economy and everything else here at home. home. And because the economy is so interconnected, the problems over in other places don't necessarily stay in those places. So it is a complicated story.
Liz Truss is a fool, in my opinion. I mean, she really is coming back full back to Thatcher, and she just misunderstands the European moment. If you look at what just happened in Italy, Sweden, what's happening in the Czech Republic, Slovakia, everything we've pointed to, it's clear what's going on. You have major economic stress, and that is leading to massive social turmoil. She's instead just pivoting back to Thatcherite. I believe it's the first tax cut in the UK since 1972. And at the same time, has 40-year high inflation and also, what else? Massive energy prices, which are a result of a foreign conflict. So she's digging down to kind of to what she was raised in, I guess. But there's no real answer. I was seeing Ross Douthat talk about this yesterday. She is setting the stage for probably an eventual Labour victory, and then for the re-rise of UKIP-style populism, which led to Brexit. And that's going to leave the island in chaos for no reason, whenever she could just be a forward-looking thinker. And instead, it's we've seen a reversion past the gains that I thought we'd seen with Theresa May and with Boris Johnson's governments.
I mean, I cannot imagine anything more tone deaf than lifting the cap on banker bonuses.
When energy prices are so high for small businesses and pubs in the UK, which are all needing either closing or on the verge of laying people off. You found this yesterday. This underscores how tone deaf this is. Put this up there, which is that in the UK, most people's mortgages reset every 2 to 5 years. So that means 1.4 million homeowners in Britain are soon going to see a massive monthly payment spike, which they did not expect at all, Krystal. I don't really know why fixed rate mortgages don't exist in the UK. That's an interesting question kind of in its own right, but that's just the system that they have over there. So when you have a reset every 2 to 5 years, well, I don't think anybody thinks that rates are going to come down 2 years from now. That means a huge portion of the UK public is about to pay a ton more in mortgages and in energy costs to heat said homes. The fixed costs that these people have are going to go up by 20, 30%. That's crazy when you also consider, think about how much of their income already goes to taxes. So their disposable income just took a huge haircut for events that are totally out of their control and up to the government.
And the answer from the government is, how about we cut taxes for the wealthy? How about that? Would that help you out? Would that feel good?
So crazy.
Let's make sure those bankers are getting what they deserve. Am I right? Yeah. It really is wild. When I dug into the details of it yesterday, I was actually shocked because it did feel like such a throwback. Then again, it's not all that different from what Trump did when he was in office with the Paul Ryan suite of tax cuts, but it is pretty wild to look at. And, you've had markets that are really in turmoil around the world. And typically, usually in any country, there's sort of a double-edged sword. When their currency is strong, it's good for some groups and bad for other groups. And when it's weak, it's, vice versa. Typically, when your currency is weak, you can sort of offset the problem because, then your exports are more in demand because they're comparatively inexpensive. And so you can sort of make up for it by shipping more goods around the world. But because you have either recession or mounting fears of recession in a lot of quarters of the globe, you also have decreased demand in a lot of places. So that's not really helping them out at this point. So in any case, it's just another sort of sign of the precarity of the global financial system and of, with a lot of potential ramifications for our own economy here at home. And I'm going to take a look at more of that in my monologue today, and a lot of new signs that the Fed policy is really going too far, too fast, and could cause a severe recession here at home. So we're going to take a look at that as well. Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.